Every second, somewhere on Earth, somebody taps a card, pays for coffee, buys groceries, books a flight, subscribes to a streaming service, or shops online. Most people think Visa is the company moving their money, but that is one of the biggest misconceptions in modern finance. Visa is not a bank. It does not keep your savings account. It usually does not lend money. It does not issue most of the cards people carry. Yet somehow, Visa became one of the most powerful companies in the world. The reason is surprisingly simple. Visa built the roads that money travels on. Imagine every bank, merchant, ATM, payment terminal, website, mobile app, and online store connected by one giant invisible highway. That highway is Visa. When you tap your card at a store, an incredible chain reaction begins. Your merchant sends a request to its acquiring bank. That request enters Visa's global network. Visa identifies your issuing bank. Your bank checks whether the card is valid, whether you have sufficient funds, whether the transaction makes sense, and whether fraud is suspected. Within milliseconds, an answer returns, approved or declined. The entire process often happens faster than a human blink. Millions of people experience this every day without realizing the complexity happening behind the scenes. Visa is essentially a communication company for money. The genius of Visa is that it never needed to become a traditional bank. Banks carry the credit risk. Banks lend the money. Banks manage the customers. Banks handle repayment. Visa simply connects everyone together. This creates an incredibly efficient business model. Every new bank joining the network makes Visa stronger. Every new merchant accepting Visa increases its value. Every new consumer creates more reasons for others to participate. This phenomenon is called the network effect. The bigger Visa becomes, the more difficult it becomes to replace. A small payment company can create technology, but it cannot easily recreate decades of relationships with banks, merchants, processors, governments, and consumers. That is why Visa is not just a card logo. It is infrastructure. Today, Visa operates across more than 200 countries and territories. Thousands of financial institutions participate inside this ecosystem. Millions of merchants rely on it every single day. And because commerce never sleeps, Visa's network cannot sleep either. It must operate 24 hours a day, 7 days a week. A payment in London, a hotel booking in Dubai, a coffee purchase in New York, and an online order in Sydney all need to work reliably. That reliability is the product. But with great scale comes enormous responsibility. Visa must constantly protect its network from cybercriminals. Every day, fraudsters attempt to exploit stolen cards, fake identities, compromised websites, and unusual transaction patterns. Visa uses artificial intelligence, machine learning, and behavioral analysis to detect suspicious activity before damage spreads. Imagine a card normally used in Toronto suddenly being used minutes later in another country. Imagine a customer who usually spends small amounts suddenly attempting a very large online purchase. Imagine hundreds of transactions being attempted from the same device in a short period of time. These patterns create signals. Visa's systems evaluate those signals at incredible speed. The goal is not only to approve good transactions. The goal is to stop bad ones without annoying legitimate customers. That balance is extremely difficult. If fraud controls are too weak, criminals win. If fraud controls are too strict, real customers get declined. Visa's job is to make the entire process feel invisible. At the same time, Visa is preparing for a future where the plastic card itself may become less important. Digital wallets are becoming increasingly common. Consumers can now pay with smartphones. Smartwatches are becoming payment devices. Online merchants can store tokens instead of real card numbers. Even cars may eventually become payment devices, paying for fuel, parking, charging, and tolls automatically. The definition of a wallet is changing. Visa wants to remain at the center of that transformation. That is why the company invests in tokenization, contactless payments, digital identity, real-time payment services, and partnerships with fintech companies. It knows that the future of payments may not always look like a plastic card. But as long as money needs to move safely between buyers and sellers, Visa wants its network to matter. One fascinating fact is that most people are not actually Visa customers directly. Banks are Visa's clients. Merchants are Visa's partners. Consumers simply participate inside the ecosystem. This is why Visa can quietly become larger without needing to directly manage billions of individual relationships. Visa earns revenue when its network is used. The more commerce moves digitally, the more valuable Visa becomes. This is why cashless societies are so important to its future. Every payment that leaves physical cash behind becomes another opportunity for digital payment networks to grow. A small coffee purchase may not seem important, but when billions of small payments happen across the world, they become one of the most powerful business engines ever built. That is why Visa's business model is so attractive. It scales with global commerce. It benefits when more people shop online. It benefits when more merchants accept cards. It benefits when travel increases. It benefits when economies become more digital. But Visa is not without competition. MasterCard is its largest global rival. Fintech companies are creating new payment systems. Real-time bank payment networks are expanding. Governments are encouraging domestic alternatives. Central banks are exploring digital currencies. And some merchants dislike the fees involved in card payments. These pressures are real. But replacing Visa is extremely difficult. The challenge is not simply building technology. The challenge is convincing billions of consumers, millions of merchants, and thousands of banks to change habits that already work. Visa understands this better than almost anyone. Its strength is not only software. The strength is trust. A merchant accepts Visa because customers carry Visa cards. Customers carry Visa cards because merchants accept them. Banks issue Visa cards because the network is widely accepted. And the entire system keeps reinforcing itself. This is the quiet power of Visa. It does not need to be loud. It does not need to own the store. It does not need to own the bank. It only needs to remain the trusted network in the middle. That is also why the Visa brand is so valuable. When people see the logo, they expect the payment to work. They expect it to be fast. They expect it to be secure. They expect it to be accepted. That expectation is worth billions. For most companies, invisibility would be a weakness. For Visa, invisibility is a strength. People notice banks. People notice stores. People notice online marketplaces. Very few people notice the network underneath. And that is exactly the point. The less consumers think about